Hey traders, it's Ben Nathan here from FX News Trader and thedailyscalper.com. So I wanted to cover fundamentals. Now, by now, most of you know I'm a solid advocate for fundamental trading, or at least trading with some background fundamentals taken into consideration. Now, I'm an advocate to the extent where if I see a perfect setup on the technical side of things, I will not take it if the fundamentals do not match up. And that's why and how I achieve the kind of results that I achieve today. Now, you can head over at any point to one of my websites to have a look at my performance. It's live account performance. So if you go to fxnewstrader.co.uk, my FXbook account is actually linked in. This month we're approaching the plus 8% mark with little drawdown and a maximum risk of 1%. So the results are there to see, so you can have a look for yourself. But on to the important subject at hand, fundamentals. So in a nutshell, I perform the way I do because I perform based on fundamentals. Why do I use fundamentals? Well, it's simple. Every single market move you see, or any trends you see, will be a result of fundamentals. They're not there because of a pattern. They're not there because of some kind of technical setups that people are looking at. They're there because there's background fundamentals there. So if you can learn to read those fundamentals, then ultimately you'll perform much better. Now, I'm absolutely no expert. I'm no market analyst. I'm no trading expert. I'm just a general profitable trader working from home, making a full-time living from Forex, and also making additional living from teaching others to do the same. So to put into practice the power of fundamentals, let's have a look at the Australian dollar. Now, yesterday we had some pretty good employment data come through from Australia, and we saw a big dip up. Now, I can guarantee that the majority of traders new to fundamentals would think, okay, well, we've had some good news on the Australian dollar, so I'll just take a buy on the Aussie dollar pair. Well, that's where people are going wrong, because they're not looking at the bigger fundamental picture. Because while we've had a decent move up from the daily open on the Aussie US dollar pair, ultimately the move stopped till around, we're about 73 pips up from the daily open, which is still good, but the reason why it's only 73 pips up is because of the fundamentals. Now, what do I mean? Well, in the background, the US dollar, the fundamentals are strong on the US dollar because, in a nutshell, without going into too much depth, the Federal Reserve, or the US Bank, is looking at a rate hike for this year because fundamentally they believe that the economy for the US is really good. So if you think about it, if you were buying into this Aussie US dollar pair, sure, there's some Aussie strength there, but that's got to battle against dollar strength. And as you can see, because of that, the market's hitting a range. So how would I apply fundamentals? Well, again, I'm only using the Australian dollar as an up-to-date example to illustrate my point and to illustrate the power of fundamentals. So what do I know? I know that the euro is very weak. I know the reasons behind that. Again, it's something we've gone into every day with our daily analysis that goes straight to your email from fxnewstrader.co.uk. But in a nutshell, I know the euro is weak. So just by taking a logical outlook on things, logic says that the Australian dollar would do much better against the euro than it would against the US dollar because the euro is weak. So if we have a look at the Euro Aussie chart, remember we were 73 pips away from what the daily open was on the US dollar pair. However, on the Euro Aussie pair, we're 178, so 180 pips away. So the move has been 100 pips greater on this pair purely because fundamentals are there on both sides of the coin. So fundamentals are there to push the euro down, fundamentals are there for the Aussie to strengthen. That's why logically this pair moves more so than the Aussie US dollar. So that's a very simplified outlook on what fundamentals mean to your trading and exactly why you need those to actually be a successful trader. Now, I'm willing to bet, we all know the myth, not the myth, but the statement that 90% of traders fail. I'm willing to bet that not only is it due to the psychological implications, but more so it's down to the fact that they aren't following the fundamentals. It doesn't have to be complicated, and to illustrate the importance of an illustration of why fundamentals again are more important than technicals, if you trade a technical pattern alone and trade it every day, then what you are ultimately relying on is chance. So you're relying on chance that the strategy will win more times than it will lose, and that the wins will be greater than the losses. So there's no outside influence, it's pure chance. So you could get lucky, but ultimately you are going to be trading against fundamentals at one point or another, and that's when you're going to see some big losses. However, when you apply fundamentals to the background, so you have a fundamental reason for entering a trade on both the currencies that are involved, then in actual fact, rather than relying on chance, you're trading based on logic, and actually you're investing into a pair based on the current fundamental strength or weakness. So what would you rather do? Would you rather gamble on chance, or would you rather invest?